Good morning, ladies and gentlemen, and welcome to the COSTAIN Group PLC half-year results investor Q&A session. Throughout this recorded meeting, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so on the Investor Meet Company platform. Before we begin, we would just like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the team from COSTAIN Group PLC. Matt, good morning, sir.
Good morning. Thank you very much, and good morning, everyone. Thank you for joining us this morning. I'm joined today by Alex Vaughan, CEO, and Helen Willis, CFO. Alex is going to make a few introductory comments, and then we're going to get straight into the questions and answers. I know there's some that have already been submitted, so thank you for those. And as was just said, if you have more as we go through the session, please add them in. We'd be delighted to answer them. So with that, I will hand over to Alex.
Thank you, Matt, and good morning, everyone, and thank you for taking the time to join our half-year results investor meet call, and that we'd welcome any questions you'd like to ask us. So I'm Alex Vaughan. I've been Chief Exec of COSTAIN now for 6 years, and I'm just going to give you a very brief overview of our results and our reflections, and then Helen, our Chief Financial Officer, and I will take the questions. If you haven't had a chance to watch yesterday's results presentation that we both gave, you can view a recording of that presentation via a link on our website. So I'd encourage you to look at that if you're interested. When I look at the highlights of the results presentation and the results that we announced yesterday, look, I'm incredibly proud of all of the hard work and dedication of the COSTAIN team and what they're putting in to executing our ambitious strategy. This has resulted in an increase in operating profit margin and operating profit again, and the forward work in the first half of the year. All of that underpins both our confidence in delivering expectations for the full year this year, and then growth in a significant step up in growth in revenues and operating profits in full year 2027. So it has been another positive financial performance in the first half of the year. Revenue was 525 million, and that reflected the continued growth in natural resources, which was also offset by a reduction in transport. That was due to the expected completion of a number of road contracts ahead of the new contracts that we've already been awarded starting next year, and a rephased schedule for HS2 in the short term, moving that work back a couple of years. I think what's really important is the quality of the contract portfolio that we have, and our strong contract execution, because you can see that coming around, that despite that revenue small decrease, we've got a 3% increase in adjusted operating profit, which is great news, and an increase in that we've got an operating margin of 3.2% in the first half of the year, which is a big step up from last year's 2.5%. So you can see the profitability of the business growing, and we remain on track to deliver our targeted 4.5% margin run rate during the second half of this year, as we build to grow that adjusted operating profit margin in line with the targets that we've set out before. Our net cash position remains very strong, and at the end of the first half, the net cash was 144.9 million, which reflected the timing of some of the payments that we were going to get in. But we've reconfirmed that we remain on track for our year-end net cash to be around about 170 million, which is in line with the previous expectations that we set out. Now, as a result of our focus on critical growing markets, we've continued to win a lot of new work and add a number of new customers, and we've expanded our forward work position to 5.6 billion pounds, up from 5.4 billion at the year end, which was a significant increase on the previous half year. That 5.6 billion is now much more than 4 times our full year revenues for last year. And if you take that, you step back, the bidding activity levels remain incredibly high, and we expect to be making a number of further new contract announcements in the second half of the year. So the forward growth of the business is becoming securer. And if I look at the marketplace, infrastructure investment is increasing significantly, and we see real momentum in the work progressing, as is evidenced by the further awards that we've made this year and the high level of bidding activity. We were obviously encouraged by the commitments made by the new government in its 10-year infrastructure strategy to increase investment in transport, defence and nuclear energy, along with the significant increase in committed regulatory investment in water, which is at a record high, energy, again at a record high, and the aviation sectors. All of this underpins our clarity and confidence in the significant growth ahead, and you could not wish to be in better markets. Now, through the growth in operating profits and margins, continued strengthening of our balance sheet, and the progression in our dividend alongside our share buyback programme, we are creating substantial value for our shareholders and investors. And given the very positive market outlook and our business resilience, we're increasingly confident of delivering on expectations for further progress this year, next year, and that step change in 2027 and beyond. Now, the step change in growth in 2027 revenues and operating profits and margins and net cash are driven by 3 things. Firstly, and it underpins the margins we've made this year, the quality of the contracts that we are now signing up to and being awarded, and the strength of our contract execution is just giving a real confidence in how we can deliver solid margins and solid contract profit. The second thing is obviously the increased volume of forward work, and you can see that coming through in the increase that's been made and the confidence that we have that there'll be further announcements coming in the second half. And then it's also the confidence in further work being secured, because we are bidding there's a high level of bidding, there's a lot of committed investment by our customers, so we see that. So those are the 3 things that really underpin the confidence in the growth that we're talking about for 27. So finally, look, when I step back and I reflected on our results, for me, the business is in the strongest position it's been for years. And that's because, firstly, we've again successfully delivered growth in both operating profits and margins, as well as further strengthening the balance sheet, and we're on track to meet expectations for this year. We also continue to win that further good quality work and have a growing forward work position of 5.6 billion. And as I've said, that's over 4 times last year's revenue, which by any comparator is at the high end. And that positions us for the step change, as I've said, in revenue and profit growth in 27. And our market outlook is extremely positive, with significant growth across all of our markets, and that work is now flowing through. So as I said, for me, the business is in the strongest position it's been for years. So thank you. Thanks, Matt.
Thank you very much, Alex. So we will now turn to the question and answer session. We'll begin with the pre-submitted questions, but I can see we've had some additional ones come in this morning as Alex has been speaking. So thank you for those, and we will answer those. But starting with the first question that was pre-submitted for you, Alex, is on topic of Thames Water. That is obviously in the news a lot at the moment, and really wanting to get your views around, given the issues that Thames Water is confronting, how are we feeling about working with them and the future with them?
Yeah, look, great question. And you can't turn the TV on or read the newspaper now with there being a commentary about the state of the UK's water industry at the moment and what needs to happen. And as a result of that, we've got record investment going into water in this next 5 year, £104 billion worth of investment in the next 5 years. And we know that in the 5 years after that, there's going to be even more investment. So huge investment being made to fix the challenging situation we've got at the moment. And positively, COSTAIN holds strong positions with 7 of the largest water companies, and we've got contracts with them, some for the next 10 years and some for the next 5. And that gives the company significant growth opportunity. And Thames Water is a customer we've worked with for a long time, and we don't do a lot at the moment, but they're talking to us. There are strong opportunities, whoever is the owner of Thames Water, to turn around and deliver the critical infrastructure that is needed both for London, the Thames Valley. As a business, we've got a really strong pipeline of water opportunity on top of the other. And what I would say, there was another thing in there about the COSTAIN Group had some of the past issues we had with councils and planning authorities. The good thing is that government is helping to address the whole consents and planning issues that the country has, which is fantastic news, and that all of the new contracts that we sign up to ensure that we address those issues before we commit to a price and a program. So I would see Thames Water as a big opportunity, because whoever the owner, significant investment has to be made, and I'll see that the type of contracts that we're signing up to really protect us from those challenges.
Great, thank you, Alex. Next question is also for yourself, I think. It's a great question actually about what the culture is like at COSTAIN.
Yeah, look, great question. And I suppose I'm a little bit biased because I've been with COSTAIN for 35 years. So clearly I love the company and the people that work for the company. But let me just talk about the values. I was going to talk about the values and core behaviours and some of the underpins. So talking about culture, the values of people who work for COSTAIN, our values are integrity. So we will always do the right thing and we will act with absolute integrity at all times. Safety and well-being, we won't do anything that isn't safe for our team to do it. And we really care about the well-being of those people that work for us. We are a business that's environmentally and socially responsible. We want to have a positive impact on society and the environment, and we are incredibly customer focused. And that is a real priority for us and makes us a valued partner for our customers. So those are the values: integrity, safety and well-being, environmentally and socially responsible, and customer focused. Going alongside those, there are 4 core behaviours that we ask people at COSTAIN to work to. They are curiosity, collaboration, courageous, and caring. And those are, for me, about driving that growth mindset as a business, that curiosity of how we go about doing things. Collaboration, our business is all about teamwork. Courageous is being brave to come up with that new idea, challenge the ideas, look at doing things differently, make sure that we're open and honest about the financial performance and where we are and what goes on. And that caring is caring for the environment, caring for our customer, caring for each other. It's just making sure. So I hope that brings to life the sort of culture, a place where we embrace teamwork, we have a growth mindset, and we solve some of the biggest challenges together. Now, that's from someone who's been here for ages. Helen, would you like to give your impression?
Thank you, yes. So I wholly endorse all of that, but I say, as someone who's been here nearly 5 years and coming into the industry fresh, coming into COSTAIN, I think what's really struck me is the culture we've created here is truly inclusive in all ways. And as a female coming into what has been a male-dominated industry, that's a really important factor. But it's not just about that gender diversity. It's truly diversity in all respects. And I have felt it to be a very respectful culture, and we've worked very, very hard at, you picked up the point, Alex, creating a transparent environment where people feel safe to share ideas, safe to bring problems or opportunities, and we're definitely stronger for it. So I think it's a very special culture at COSTAIN.
Thank you very much, both of you. Sticking with you now, Helen, I think for the next question. We have a question about AI and how we're using it to drive efficiencies and what sort of benefits I guess we might expect to see from AI.
Great. A hot topic. So we are driving a digital transformation in COSTAIN. We've been implementing new systems over the last year or so and have a program of change that we're very excited about and think it is going to differentiate us in the market. And AI, of course, is coming up very regularly, as you might expect. There's obviously an incredibly fast pace of change in terms of what AI technology is out there and what it promises to do. I think we are taking a cautious approach to it. The primary consideration for us as a company is making sure that we maintain our cybersecurity. So making sure we use tools that are cyber secure, that are keeping our data secure and our customers' data secure as well. So that's sort of a consideration number one. But we are very alive to the fact that it can do new and different things for us. It can help us to understand our business better. And so we are certainly, any new systems that go in, we're making sure they have AI functionality. And we are thinking about how we use that, how we release that into the business, and therefore how we start to extract value from it. So I think a really exciting area. But for us, we're on a digital journey that will be about new systems, including AI capability. So exciting times.
Thank you, Helen. So the next question is returning to I guess a more topical story again. So the Lower Thames crossing is obviously now got the go ahead, and there's a question about whether we have any agreed or proposed involvement in that large project. Alex.
Yeah, look, we're not directly involved in the Lower Thames crossing contract, but however, we are involved in many other programs across the industry and across our sectors. So you'll have seen us as one of the players in the Thames Tideway scheme over the last 6 to 7 years, and that is transforming the health of the River Thames and London and supporting the growth of London. So we've been involved with that, and we're involved in a huge number. Actually, on the front page of our results presentation, you'll see the Buell Reservoir, which is a fundamental piece of infrastructure that is going to safeguard clean water supply to the southeast of England, working with Southern Water. So water, critical infrastructure we're involved with. If I look at rail, clearly HS2, major strategic program that we've been involved with. Road, we're involved with quite a number of schemes in London to safeguard the integrity of transport coming into and around and inside London, as well as the M60 up in Manchester, critical piece of road infrastructure. Energy, we're involved in the BP Net Zero Landmark project, the first major carbon capture and storage scheme that will unlock a green energy future for the UK. Wow, who wouldn't want to be involved in that? Defence programmes like the 20-year plan to redevelop Devonport, really important programme. And then we announced earlier this year the award of a contract for Urenco, where COSTAIN is going to be leading a programme that is all about creating the fuel that will unlock that nuclear energy future. So no, unfortunately not involved in Lower Thames crossing, but we are involved in a lot of other very exciting landmark schemes.
Great, thank you very much, Alex. Yes, certainly sounds like lots of opportunities. And the next question follows on from that in some respects. It's around the potential for capacity constraints that we may face given this large volume of forward work and opportunity out there. Do you see any capacity issues from either a personnel point of view or a financial point of view?
Yeah, look, absolutely. If you look at the growth and investment and the fact that, a lot of our workforce will be retiring over the next 10 years, there's a really big focus on driving the skills and expertise and capacity to be able to deliver this infrastructure. So as a business, we're recruiting a record number of graduates, apprentices, and running development programs in our business to upskill our people, which is fantastic, and continuing to recruit people and grow, which is great. I think one of the real things, when we look at how are we going to get the capacity, how are we going to attract the capacity and develop the capacity, I'll come back to something I talked about in our presentation yesterday. COSTAIN benefits from 3 C's. And those 3 C's are, the first one is consistency. And it's all about the consistency of relationships and approach. So with our customers, we have long-term relationships and our long-term approach. We really get to know each other. And we do the same with our supply chain. So that just makes people feel confident in working with each other, very open, very clear, very transparent. And that's a fundamental attraction for people wanting to work with COSTAIN and wanting to work for COSTAIN. And then there's continuity of work volume. So because of the type of work we win, which is 5-year programs of work, we're able to give people confidence that they can pay their mortgage and continue to buy things for their family for the next 5 years. That attracts people to want to work for us, as well as the exciting projects that we deliver. But the fact that you've got that continuity attracts those people. And then for our supply chain and for us with our clients, the fact that we have collaborative contracts. So these are not adversarial, they are about sitting down, co-developing the solution, co-developing, managing the risks, and then getting on to execution. That is something that we can attract people for, and we can attract our supply chain. So where we're placed and the type of contracts that we win and secure and deliver really gives us the opportunity to reach in and address that capacity challenge that we have.
Fantastic, thank you, Alex. So the next question I will turn over to Helen. We've had quite a long question on dividends, essentially asking you to set out your views for dividend policy at the company over the next few years. What should investors expect from COSTAIN and dividend?
Thanks, Matt. So I think it's the sort of wider topic of capital allocation, and we do set that out in the RNS. The place that we have prioritised over the last few years is investing in the company. We truly believe in the growth opportunities at the company, and we've been investing in our transformation. We've been investing in bringing the right skills in to really drive those opportunities and drive that growth, and you can really see that coming through in the forward workbook as Alex was describing earlier. And we've been investing a capital expenditure in our digital transformation, as I was just referencing earlier, bringing in new systems. So that continues to be a focus for us. We believe there's a lot more that we can do. We are driving the margin up. That means we might need other skills to come in to continue to drive that upwards. And we think we're ambitious for more growth. So we will continue to prioritise those investments. That said, our balance sheet is really strong. We do have more than enough cash, and so we have resumed payments of dividends, which we resumed in 2023, and you'll have seen those increasing steadily into 24, and in the interim that we've just announced at half year. We do have a 3 times policy stated, and we anticipate moving towards that. And of course, we have then done share buybacks with what we consider to be extra cash returning to shareholders. So I suppose that's the sort of order of priority. There is just one thing to remind on that I spoke about last time. We do have the dividend parity clause with the defined pension scheme, which says that contributions into the scheme should match payments to shareholders, and that is in place in the overall agreement with the pension trustees. But we have introduced the annual check that we carried out last March and this March, and that gave us annual pauses to cash contributions and dividend parity. So that is something that is sort of in the background and gives us cause to be slightly cautious on steps we take and guidance that we give in this area. So we are making progress on that, and we'd hope to be a bit more clear on that when we get to the full year. So thank you.
Great, very clear. Thank you, Helen. So the final pre-submitted question I'll hand to Alex shortly, and then I can see we've had a number of questions come in during the call on the first half results release from yesterday, which is fantastic. Thank you. So we'll turn to those shortly. Keep them coming. Whilst you do that, I'll ask Alex the final of the pre-submitted questions, which is around whether we're looking at any options to bid for work outside of the UK market over the next 5 years or so.
Yeah, look, so good question. We certainly look at the potential, and it's something we're very open to. However, what I would say is I come back to my 3 C's that I've just talked about. I think what is a critical factors for success is where you can have that consistency of customer relationship. You know, I'm not a fan of, and I will not support one-off relationships with customers, because I don't believe either party strives to or can have the best outcome. So that the consistency of relationship is something that we would look for if we were going to embark upon an opportunity overseas. We'd also want to be able to see continuity of a work program. So this would want to be something that isn't just one contract, could be a number of contracts or a program of contracts, and would have some longevity around it. And then we'd also want it to be a collaborative form of contract. So we certainly, as a business, we've been very clear, we will not sign up to any single stage fixed price lump sum contracts. That is not something we would tolerate. We want to work under collaborative contracts. So, you know, that would be the rule book. And again, I would say we are not short of opportunity in the UK. There is huge opportunity for us right across. There is record investment in road, rail, aviation, water, energy, defence and nuclear energy, huge investment. And we know that there's other things like ports that, you know, once the offshore wind market really gets going, is also going to be increasing in investment. So we are in a target-rich environment, and we're very focused on those 3 C's and how that unlocks really valuable opportunities for us. So thank you, Matt.
Thank you, Alex. Okay, so we will turn now to questions relating more to the results release from yesterday. There's a number of questions really trying to unpick, I think, the revenue decline that we saw in the first half, wanting to understand a little bit more around the drivers behind that, how much of that was expected, because obviously the market took umbrage with it yesterday. So Helen, perhaps you could talk about you know, the revenue decline that we saw in the first half, and then there's a number of questions around how we should then think about revenue going forward into the second half and through into 26 and 27. Was it just short-term timing issues, and do we have the work coming through in these future years to underpin that revenue forecast that we see out there?
Thanks, Matt. Quite a lot in there. I'll try and work through. If I miss anything out, please just give me a nudge. So first, if I tackle, first of all, the movements in the first half, really transportation, as you can see from the presentation, expected decline in roads revenue as we are completing a number of projects there. And we've talked a lot about what will come next. I think those road jobs were signed some years ago, almost 10 years ago, and were carried out through quite challenging times, inflationary periods and COVID, and have been consequently not at the margin we would like going forward. But we are active and bidding other road jobs. We talked about the M60, for example, in the presentation yesterday, and those terms and conditions are much more in the space that we would like going forward. So we see opportunity coming through there, and I think come 26 and beyond, we'll start to see that reversing for roads. HS2, we talked about the short-term rephasing of work out of 25 into sort of 26 and 27. That work is still ours. We're performing really well on that contract, and it really is a factor of how the overall programme is being sequenced. And so we are quite confident that will be work that we will come back to. So thinking about the full year, clearly that takes our revenue down a little bit, but if you have looked at our consensus, and that's on the website, our consensus operating profit was at 46.6, and we were quite clear yesterday that we are maintaining that. We believe that that's absolutely achievable. So lesser revenue, higher operating profit, and that is going to continue to increase our operating margin. So the target is 4.5% during FY25. So think about that as the H2 margin. And if you do the sums on all of that, what that means is the full year will be 4.x in all likelihood. So we're doing very well on margin. That's a real indicator of the quality of the business and that improvement that we've been driving over the last few years. So then how should we think about the revenue going into 26 and 27? So as Alex has been describing, we have won an awful lot of work. We have visibility of where that work will be and when it will land. We're still driving more opportunities that will land and will impact on 26 and 27 and beyond. So there's more to come, we're quite sure. Again, if you look at consensus on our website, you'll see there is anticipated growth in revenue and profit for 26. And we've talked about a step change in 2027 where revenue really starts to have a significant uptick, and obviously that falls through into profit. So we believe we've created the right platform for growth. We've invested in the right areas. We have a cost base that supports that growth. So we're confident that revenue and profit growth is going to come through, and the margin will continue to tick up. As we grow, we'll get some operating leverage. The portfolio will continue to improve as we drive all of these changes through. So we're excited about what's going to come in 26 and 27 and thereafter.
Great. Alex, do you want to add
anything?
Look,
I think Helen's covered everything. I think there's just been some question about at what point did we know about. So we knew about the roads coming off, and I think we'd put that in the guidance. So we knew those were going to complete. Clearly, we were expecting the M60 to start earlier, but we've only got the spending review that's come through confirming that is now going to go ahead now. And then on HS2, I think that is the one that was new news to us. So when we started the year, we had an agreed budget with the client, and we've been working to that agreed budget. But come sort of mid-June, they started to talk to us about the need to rephase our work. And the reason they want to rephase our work is that there are priorities elsewhere on the programme that need to be accelerated, whereas we're not in that situation because we're doing rather well. And so we've been working with the client, and it's only recently now that we've understood the sort of impact of that. And that's why we've announced it today. But clear for us is that full year expectations for profit are going to be met because of the resilience and strength of the business, that we've got the ability to be able to manage our situation. And obviously we always have contingency and things for things, and therefore we're, as a well-run business, we can still deliver the profit that we want. So I think you should see it as a sign of a business that's really strong, well capitalized, very responsible in how it recognises revenue, and therefore is a stronger partner going forward. Great.
Thank you very much, both. The next, I'll take two questions maybe, and for Helen here, that are related. One is around our payment terms to subcontractors, and you know how we view those. Are all our subcontractors happy and content with the way we work with them? And then the second one on the customer side, actually referring back to the Thames Water example, how do we mitigate against credit risk? What is the sort of process and controls we have in place to protect ourselves there.
Thanks, Matt. So on payment terms, you'll see on slide 12 of our presentation, we give a stat of how we pay our subcontractors. So we paid 97% of invoices within 60 days, and that is right up there in the industry. Paying our subcontractors promptly is a really important factor for us. We want the best quality supply chain working with us, and recognizing that some of those are small enterprises. Cash flow is of course absolutely critical for them. So we are absolutely at pains to pay them promptly, not to squeeze them on terms, to make sure they remain healthy, such that they deliver for us. We also do other things for our subcontractors. So we run supply chain academies. We support them in all sorts of areas where they may not have their own internal resources, and we work with them as very much part of our team. So that's a really important point for us. So thank you for raising that question. And customers, our customers are old-fashioned term, blue chip customers. We know them, as Alex said. Who we select as customers, really important for us, as long-term relationships. And so we know them, we understand them, we know them well of old. For us, risk of payment against amounts outstanding to us is very low. We do not have a DSO issue. We are paid very promptly by our customers. The question for us as a long-term contractor is what amounts sit in work in progress, and are we able to promptly move those into being certified amounts and therefore invoiced and therefore paid. And that is about having a really well-run organisation that works well in collaborating with the customers and making sure we are doing work that is agreed, and then it flows through the processes. So it's not something that is a concern for us. It's about us managing our projects, our activities on the ground really well, and then that process flows through.
Great, thank you, Helen. We've got two other questions here that are related to the large share price drop that came yesterday. And given that, one question: why aren't we buying back shares again? And the second one, following the share price drop, are we concerned about a cheap bid coming in? Helen, do you want to take the buyback?
Yeah, I think, for us, we want to drive that share price up. We absolutely do. We're here to create shareholder value. But I think that is an unfortunate blip yesterday, but one we view as an overreaction in the market. Do we believe the value of our business has fundamentally changed overnight? Absolutely, we do not. We're very, very positive about the future, as you've heard from us today. The consideration of a buyback, I think, is something that we would do over time, and not as a reaction to a short-term share price movement. I talked about our capital allocation priorities. We need to maintain our cash to really invest in the business, and there's other sort of priorities I mentioned earlier. So that's not in our thinking, and we're very much hoping that share price will stabilise and come back up to counterbalance that overreaction yesterday. Alex, do you want to build?
Yeah, I'd agree 100% there. I think coming back to, would we be a target? Look, we're a public company, therefore at any point someone could approach the business. Are we disappointed with the reaction yesterday? Yeah, I mean, we're quite surprised. Maybe we shouldn't be, but we're quite surprised on the basis that if you look at the quality of the contracts we've got and the financial performance and the profit and margins that we're making and the strength of the balance sheet, the business is in really good health. If you look at the guidance we've given for the end of the year, we're saying we're going to do what we said we were going to do. And if you just look at the volume of work that we've won, which supports the growth, it's incredible. And at the moment, this business is undervalued in our view. And it is undervalued if you look at any of the analysts' notes as well. So, and And nice article in the Times this morning, turning around and going, this is an opportunity to buy, and something that, you know, so look, you know, it's one of those things. We're running a really good business. We feel very confident in the direction. We feel very strong where we're going, and that's what we'll keep focused on and keep driving.
Thank you, Alex. Another question here, a broader question really around the competitive landscape. Has that changed in the last 6-12 months? Of barriers to entry increasing, and how are we differentiating ourselves versus the competition?
Yeah, shall I take that one?
Yeah.
Well, it is still competitive, so I'm not going to say it's not a competitive industry. It is, but I think, as you can see from the work that we've been winning, we are successfully competing well. And what differentiates us, again, is the strength of relationship, our technical expertise, the way we do business. And what's really important to every single customer is that we come up with a better solution than anyone else can come up with. And that's about our skills and expertise as a business to drive value for the customer. Helen was talking earlier around the opportunity that AI presents, but there's a huge opportunity in the way that we go about designing infrastructure and then delivering it. And we pride ourselves on being able to come up with a solution that gives the customer a lot of efficiency and a lot of value and shortens the program. And that's what we compete on. And as you can see in the work we're winning, the quality of it, we're a very attractive proposition for many customers, and new customers want to work with us, which is fantastic. So it's still competitive, and we are one of the top competitors out there.
Great, thank you. I think there's time for one final question, and it's really around the we reference a number of times the step up in performance in FY27. And I guess question for you, Alex, can you just remind us of what are the factors that give you that confidence?
Yeah, and I touched on this in my opening, but I'll look forward to making the point again. If I step back and I look at it, it's about the quality of the contracts that we've got. So Helen talked about that we had road contracts that were signed in 2016 that aren't as profitable as the margin targets that we expect now. The really good news is that the forward work and the secured work we've got is contracts that we've written, we've signed up to. The quality of those contracts in terms of margin is in line with our targets. But the most important piece is risk profile of those contracts. And I've talked about collaborative contracts. These are contracts that we get to work with the customer, co-develop the solution, come up with a plan to mitigate risk, and then it's about us executing. So, and you can see the quality of those contracts coming through in the margins. So that's the underpin, the quality of the contract, strength of execution, big tick. The second thing is you can see the increased volume of forward work, over 4 times our revenue. By an industry norm is 3 times revenue. So you can see there's going to be that uptick, and we've won work, which is fantastic. So that's underpinning that. And AMP8 will be really up and running. We'll be 3 years into AMP8. We'll be at a high run rate. The defence programmes will continue to be going. We'll have new road projects that are at the margins we want coming through. We'll have the systems contracts that are at higher margin on HS2 coming through. We'll have more new energy, new nuclear. We've got we've got that stuff that hasn't really started yet, and that will be rolling. So that work that we've already secured is going to be in a really good place. And then we've got high confidence because we're turning around and saying there's going to be announcements in the second half that we're going to secure even more work in the pipeline of opportunities that we see. So we're going to be topping that up with even more. So those are the reasons why I'm really excited. As you can tell, I'm very confident that step change in growth will happen in 27.
Great, thank you. Looking at the time and the questions, I think we have now got through all of your questions. Thank you very much for the interest you've taken this morning and all the questions. And thanks to Alex and Helen for the very clear answers given there. I will just hand back to Alex for some concluding remarks, and then we will sign off. Alex.
Yeah, look, again, thank you very much for taking the time to join this call. For those of you that are already investors, thank you very much for investing in COSTAIN. We greatly appreciate it. For those of you that are thinking about it, it's a great place to invest and has a bright future. I'll come back to what I said at the start. This business is in the strongest position it's been for years, and it's in the strongest position because we're delivering on our promises and we're running a really good business. We're also continuing to win high quality volumes of work and have an amazing forward work position that's the envy of many, and that is going to deliver the step change, as I've said. And you couldn't wish to be in a better market in terms of outlook, and the critical national need for new infrastructure is going to drive, economic growth, resilience, and the decarbonisation of the UK. So we're in a great place. These are exciting times for us. So thanks very much.
Perfect, guys. If I may just jump back in there, and thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of COSTAIN Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.